All right, so we're diving deep today into Scottish income tax
Yeah,
for 2025-26.
it's going to be a good one.
We've got some fascinating analysis from my pensions advisors, and
Always a good source.
they are. And let me tell you, it's a lot more than just numbers this time.
It is.
We're talking potential confusion, surprising tax implications.
Yeah, definitely.
Maybe even a few
Raises.
moments for our listeners.
Absolutely. And I think what's really fascinating here is
Yeah,
just how Scotland's system kind of intertwines with the UK system,
right.
creates a bit of a puzzle for people earning income north of the border.
Okay, so let's just jump right into it and start with the very basics.
Sure.
What's actually different about Scottish income tax?
Well, the big thing is that Scotland has the power to set its own rates
Okay.
for income that's not from savings or dividends.
Right.
That's the big difference compared to the rest of the UK. But, and here's where it gets tricky,
Okay.
for dividends and savings income, you're still using the UK's rates.
Okay.
So it's almost like,
So two different sets of rules.
yeah, you're playing a game with two different rule books.
Right. And so how does that work in practice? I mean, is it just super counterintuitive to have to...
It definitely adds a layer of complexity
Yeah.
for people because you can imagine, you know, if you're living in Scotland, you're earning a salary.
Right.
And then you also have dividend income from investments.
Yep.
You're going to be using Scottish rates for your salary.
Okay.
UK rates for your dividends.
Gotcha.
So you've got to keep those two things separate in your mind.
So it's not even just about knowing your income.
Right.
It's knowing where your income comes from.
Exactly.
And then on top of that, we've got the whole personal allowance
Yes.
thing.
Another layer.
Yeah. So how does that fit into all of this?
So the UK government sets the personal allowance.
Right.
Which is basically the amount you can earn before you start paying tax.
Yes.
And then Scotland incorporates that allowance into their tax bands.
Okay.
Which is why if you're looking at the numbers for Scotland versus the rest of the UK,
Right.
they might look different,
Gotcha.
even though the personal allowance itself is the same.
Okay, so we got two separate systems.
Yeah,
We're adding the personal allowance on top of that.
it's a lot.
I feel like we're solving a Rubik's Cube while juggling.
A very accurate analogy.
Okay, so let's talk about the starting rate band.
Yes.
It sounds like kind of a promising thing, but maybe not.
Yeah, it's one of those things where,
Is it all it's cracked up to be?
in principle, a starting rate band increase is good news, right?
Right.
But the catch with the starting rate band is that the tax savings are so tiny.
Really?
It's almost comical.
Okay.
We're talking a maximum of 28.27 in savings.
I think I can live without that 28.8s.
Yeah, I think most people can.
So where do things start to get
Yeah, where does it
a
actually...
little more interesting?
Yeah, where does it actually impact? I think things start to get spicy when we look at the higher rate thresholds.
Okay.
So Scotland's higher rate kicks in at a lower income level than in the rest of the UK.
Right.
This creates a band where the combined tax and national insurance rate
Okay.
can reach 52%,
Wow.
which is hefty.
That's a lot.
Yeah,
So wait, hold on. Are you saying that you could potentially be a higher earner
potentially.
in Scotland and pay less in taxes?
Yeah, so this is where it gets really interesting because, for example, if you're earning £50,270, you fall into this unique situation where Scotland's overall tax structure, even with that lower higher rate threshold, actually results in you paying less tax than you would in the rest of the UK.
So it's not even just about the rate.
Exactly. It's about how that rate interacts with the entire structure.
Yeah, with the whole system.
Yeah, like finding a secret passage in the tax maze.
Totally. Okay.
Yeah. So speaking of navigating the maze, it gets even more intricate for high earners.
Okay, let's talk high earners.
Yeah, let's focus on the income band between £100,000 and £125,140.
All right, so this is where it gets serious.
This is where it gets really serious.
What's going on?
So this is where the personal allowance taper comes into play.
Okay.
So as your income increases within this band, you start to lose your personal allowance.
Okay.
Combine that with the higher tax rates, and you're looking at a combined marginal tax rate that can reach almost 70%.
Wow, so almost 70% of every additional pound that you earn is going straight to taxes.
It's a big chunk.
Yeah. I mean, is that a disincentive?
Yeah, that's the...
For high earners to stay or...
Yeah, it's a huge debate.
Or be in Scotland.
Right. Does this system incentivize higher earners to seek opportunities elsewhere?
Yeah.
It's definitely something to consider when you're analyzing the broader economic implications.
Totally. So if you're thinking about relocating to Scotland, or even if you live in Scotland and you're thinking about a job change, potentially this could have a huge impact on your take-home pay.
What's that?
Do your homework, folks.
Yeah.
Yeah, Scottish income tax is complex, but it's designed with good intentions in mind.
Right.
It's designed to support public services, make sure that everyone's contributing fairly based on their earnings.
Yeah.
So
it's just about knowing the nuances.
Understanding the nuances, planning accordingly.
Well, I guess taxes might be a certainty in life.
That's true.
But at least we can be informed.
Yeah.
And maybe even find some loopholes.
Find those little loopholes in the system.
If you want to really dig into all the details, make sure to check out my pensions advisors.
Great source.
They have tons of information on this topic.
Yeah.
And we'll see you in the next deep dive.
Sounds good.
All right, see ya.